these banks, as I mentioned, they play an important role, but they keep track of what's called the ledger, right? So when I go to the store, what happens? And I'm using my debit card or my credit card, I go and swipe that. Now that processing unit, that point of sale there, it'll go and check against the ledger behind the bank's privacy wall there, behind their security. And what it does is it checks to see if I have enough money to actually go ahead and make that transaction occur. So the bank keeps a ledger behind their security wall. And when I get my direct deposit, they go ahead and credit the account. When I swipe the card, they go ahead and debit it. And they're keeping a live running tally. And the main purpose here is to make sure that I can't double spend the digital dollars that I have. If I have $1,000 in my account, they want to make sure I can't go swipe my debit card 4 times real quick and try to spend more than that $1,000 that I have. So they play a very important role in this system to really keep track of who owes who what or who's sending who money. And they keep the ledger in a very centralized manner. But there's some challenges with this, right? So we own money that we hold at these banks, but we don't really bank ourselves. And what I mean by that is that we're somewhat at the mercy of the banks as far as when we can send people money or when we have access to that money. So if you want to go ahead and swipe a credit card or swipe a debit card, when you're on the receiving end of that, sometimes the settlement in that can be up to 48 hours. You write somebody a check, the settlement can be 36 hours. You want to go ahead and wire somebody money domestically, it could take about 24 hours, but internationally, it's very expensive. It can take a very long period of time. And what if you want to send money after when most banks close at 5 p.m. Eastern time, or if you want to send it on the weekends? You don't really have access to those things. So you don't truly bank yourself. And as we're going to get into and as we're going to learn, with cryptocurrencies, you and only you control your money, and you can send money to anybody across borders on the other side of the world, most cases in minutes at a much cheaper rate. And you can do it anytime you want. You can do it on the weekends. You can do it after hours. So you and only you have control of those funds in your own cryptocurrency wallets or on these different exchanges that you can have cryptocurrencies on.
You know, Dan, I think that this is an important point to bring up because what we're doing here is explaining the differences of how different banking mechanisms work. And here in the United States, we typically can walk to the corner if you're in a city or drive very nearby and you have access to a bank. We've got online banking here, so it's pretty easy, but that's the United States. There are many parts of the world where it is not very easy to bank. So cryptocurrency is the only way that they can transfer money in or out.
Yeah, so that's a really good point. You know, some different projects out there, what they want to do is they want to try to bank the unbanked through the use of cryptocurrencies, right? So in the United States, if you're living here, we're lucky enough to have an infrastructure, right? We have these different banks and these different institutions like the DMV. I mean, we can actually have an identity and we can have a net worth and have our money in these different banks. But what if you're in an underdeveloped country where you don't have this infrastructure there? Well, these individuals, let alone not having a bank account or having any real sense of net worth, many of them, they can't prove where they are. They don't have an identity. So through the use of cryptocurrencies and the blockchain and having more of a wide world internet out there, which some people out there are trying to do with like Starlink and things of that nature, well, you can now for the first time give some of these people in these undeveloped countries identity as well as a means of finance. But one of the things that I like to explain as like an analogy to make it easy to understand is that cryptocurrencies and specifically Bitcoin, what it's really trying to do is decentralize the flow of money, right? And an example of this would be like the internet. Before the internet, most of the information out there was centralized. What I mean by that is, hey, if we wanted to read up on history before the internet, which believe it or not, wasn't that long ago. I mean, the internet, it seems like it's been around forever, right? It's like second nature to us, but we're talking about the beginning of the 1990s or so. We're not talking about 100 years ago. So when we look at information, it was very centralized. If I wanted to learn about history, I would go to the library, I go get out one of those Britannica thesauruses, and I would read about history. But the thing is that information was put together by only a few thousand contributors, a few thousand writers. Now, could they have a different lens? There's an old saying that says that history is written by the victors. Well, maybe they omitted some stuff, or maybe they didn't write everything down, or maybe there was a different lens they were looking at. If you look at a history book from another country, I bet you it reads a lot differently than the history books in the United States. But once the internet came, what it did is it decentralized the flow of that information. So now, where do people go? Well, they don't go to the library, they go to Wikipedia. And instead of just a few thousand contributors, you have hundreds of thousands of contributors that are all fact checking each other. So this is really what a decentralized system looks like, where you don't just have a minimal amount of contributors, you have hundreds of thousands spread out and distributed and decentralized.
So Dan, when we talk about the fiat currencies that exist. When you have a central bank and you have a currency that's centralized, they can decide how much of that currency to put into the system or to be tight. And the Federal Reserve does that here. Different countries can put more money into the system by different means. It can be printed, it can be done through credit mechanisms, it can be done through stimulus. So that actually devalues the amount that's out there, because if you have more of this floating around, then each measure of currency, in the US it would be $1, each measurement is then worth less. Why is that different on cryptocurrency?
So let's use Bitcoin as an example, because everybody knows Bitcoin, right? So the way I want you to think about Bitcoin is it's a new monetary system. And it's a monetary system that's out there without the need for these central authorities. Remember, this is in a decentralized world here, without the need for these middlemen or these different banks. Remember, I said to you with cryptocurrencies, like with Bitcoin, you bank yourself. So it's really a peer-to-peer network where I can send money to anybody I want in the world at any time. And I can do that just myself without the need for these middlemen. But you might ask yourself, well, Dan, if we're getting rid of the banks and we're getting rid of the, let's say, the Federal Reserve, well, who's controlling the supply of Bitcoin and who's facilitating the transactions? The answer is the blockchain. And you guys have all heard of the word the blockchain, but many of you may not understand what it is because it's kind of, a little mystical out there. It's hard to understand. Some people, I think, hear about it, but don't really have a good fundamental understanding about it. So the way I want you to think about a blockchain is it is a distributed and decentralized ledger. Remember back to the example we gave when we're swiping our debit card, everything has to get checked against a record. In that case, it's getting checked against your bank's ledger that they have behind their security wall. Well, we're removing the banks, remember. So what happens now is that the record isn't kept by one authority. The record is kept by everybody on the blockchain that is plugged into the system. So a blockchain is literally a public and transparent ledger or way of really recording anything. We're going to get into some of the other uses out there, but people only think about Bitcoin and, hey, it records that Dan sent Barry money, but they can be used for much, much, much more than that. But when we're talking specifically about Bitcoin, well, there's a couple things that you want to understand because it's a very smart system. Remember, you don't have any of these central authorities. So you have millions of computers around the world that are actually simultaneously verifying these transactions. So instead of one central authority that's doing it, instead you have millions around the world that are doing it. And because you have this, they're all checking it against each other. Almost think of it like if you were playing a poker game, but let's say we're playing Texas Hold'em, but you didn't have chips and you didn't have any means of currency. You didn't have any dollars or coins or anything like that. But instead, let's say there was 8 of us around the table. Each one of us, we had a little notepad, and each hand, we would go ahead and write down who owes who what. We get through a certain amount of hands, we flip the page, and then we start a new block or a new page of different transactions in this game that we're playing. Well, if all of a sudden we get done with the game and let's say Megan goes, I think I won hand 4. Well, all of us can go back and check our ledger or our record of who won the hands, and you'd be able to spot out, hey, is Megan telling the truth? Is she incorrect? Right? So this is kind of like a consensus that we all come to. So this is an oversimplified example of how a distributed ledger works, except we have millions of computers. And when we're talking about blockchains, they're extremely safe. They're actually safer than many other of the record keeping methods that we use out there.
Now, Dan, let's go into why you have an incentive to keep this ledger, and that gets into what's known as mining. So let's explain that.
Yeah. So you might say to yourself, well, why would these millions of computers, why would they want to be plugged into the network? Why would they want to verify the transactions on the blockchain? There's got to be an incentive, right? The answer is yes. And the incentive is in the right place. So as a byproduct of verifying these transactions, remember, you're using a lot of computing power to do this. You essentially have to solve a math equation. If you're the first one to record the transaction to the blockchain, you get a reward in Bitcoin. The current reward is 6.25 Bitcoin. So somewhere in the neighborhood of current prices of like $250,000 as your reward. Now, of course, you're not going to win that every time, but there's a huge incentive to do so. And on top of that, you get any fees that are tied to the transaction. So when people are sending cryptocurrencies, it's never for free, right? You have to pay some type of fee, but there's the incentive to want to keep the network secure and to want to go ahead and do this. And here's the interesting part. This is the only way that new Bitcoins are entered into the system. So this is the mechanism of how you actually get more Bitcoins into circulation. There's no central authority that's saying, hey, you know what? We need to stimulate the economy. Let's go ahead and add a bunch more Bitcoin. Let's go increase the supply of Bitcoin by 40%. No, no, no. It's literally a byproduct of keeping the network secure. And it's on a set schedule. So there's not any real inflation because it's on this protocol. There's only a certain amount of blocks that are mined every day. There's only a certain amount of Bitcoins that are mined every day. Right now it's around 900. So what I'm saying here is that by the year 2150, that is when you are going to see the last Bitcoin mined according to the timeline that we're on. And after that, there'll still be incentive to go ahead and mine because they will still get the fees attached to that transaction.
Very good.
That brings up a question that just got answered, and that is, is crypto going to collapse at some point in time due to supply?
Well, the thing with cryptocurrencies is that oftentimes Bitcoin specifically, it's compared to gold. So they say that it is like digital gold. And what I mean by that is that for, I don't know, 5,000 years, people have been using gold as a hedge against inflation because there's only a finite amount of gold in the earth. It's a natural resource. There's only so much of it that you can mine from the earth. So you can't really have inflation with gold out there. Whereas cryptocurrencies with Bitcoin, it's the same thing. There's only 21 million Bitcoin that can ever be mined, that can ever be created. And so far, there's been a little bit over 19 million that has been mined to date. So there's not much more that can be created or entered into the system. And as I mentioned, it's on a set schedule. So they're not going, yes.
Sorry. And that brings us to a very important point is the different coins have different reasons why you may want to invest in them. So you just gave the rationale for Bitcoin being what's called a store of value, very similar to gold or boomer rocks. So that's known as a store of value. You're not really using gold for things today other than a store of value or maybe as jewelry. But with Bitcoin, it's a store of value. But there are other coins that can be very valuable for other reasons than a store of value.
Yeah, so another popular coin, the second largest one out there is Ethereum. Many of you may have heard of Ethereum, and that's really a network. So let's go back to our example with the internet, right? Imagine if you could have went back in time when the internet was created and you could have invested in the internet. The internet runs on a protocol called TCP/IP. That's the network. And it's not an investable asset, but you have all kinds of businesses that transact on the internet. Well, Ethereum is, think of it like a decentralized internet, right? So this is something that other companies can go ahead and build their coins or their applications on. Almost think of it like your iPhone, right? Your iPhone, the operating system is iOS. And then you have all these different applications that you can go to the App Store and you can pay for them. Some of them are free. You download them. And essentially that application has a specific purpose or utility to help you with whatever you're doing, right? I mean, maybe one's a banking app, maybe one's a different kind of app. So Ethereum is really like a network play. Almost think of it like the internet, but it's a different type of internet. And it's got the ability to have all these other dApps instead of apps. They're called decentralized apps that can now be built on that Ethereum network. And anytime you have anybody transacting on the Ethereum network, you got to pay what's called gas fees, right? So like if you're going down the highway, in order to keep going down the highway, you got to pay for gas. That's what they call it on the Ethereum network. And you have to pay in the Ethereum token, Ether. So there's over 6,000 coins out there. Some of them can be considered stores of value. Some of them have different utilities. Some of them are networks. Some of them are trying to help with facilitating different types of transactions. There's companies out there like XRP. So there is a ton of different coins, but there's also coins that have no utility, meaning they have no purpose. And they call these meme coins. And these are some of the things you have to be careful of. There's coins out there like Dogecoin or like Shiba Inu. Now, I'm not saying you can't make money on these coins because some people also can make money on meme stocks, right? But would I go ahead and advise people to invest in those? Most likely not. You'd have to be very careful because, again, they don't have a utility or necessarily a purpose. Many of these were actually created as a joke.
Megan, I see some questions coming up here. They're going so quickly. One of them is regarding volatility, but I just want to answer one quickly. Somebody asked, is gold backing the US dollar? No, back in 1971, Richard Nixon took us off that. And gold is actually just backed by the full faith and credit of the US government. I'm sorry, the dollar is based by full faith and credit of the US government, no longer gold. And I'm seeing some questions with regards to volatility. And volatility is something that is very concerning. We knew that Bitcoin topped out like what 69,000 not too long ago, and now people see it below 40,000. But Dan, you and I were looking at some charts of this, and it's really nothing new because Bitcoin is still really in its relative infancy.
It is. Let me just go ahead and share a chart of some recent price action with you here. And you can see here, just going back to the start of 2021, from January of 2021 all the way up till mid-April, we saw the price of Bitcoin go from around 28,000 up to the all-time high at that point, around 64, 65,000. So it saw a 126% increase just from January to April. What happened after that? Well, we saw some bad news coming out. This is when we saw, Asia, China specifically banning mining and banning cryptocurrencies. We saw a 55% decline from that all-time high. And from May to July, we saw a really big downturn and kind of consolidation phase here and capitulation point. Well, after that, we saw a big rise up till November when we set the most recent all-time high right around 69,000. And since then, over just the next 2 months until current prices, we saw a 45% decline. So certainly can be a lot of volatility. But as I mentioned to you, or as you mentioned, cryptocurrencies are still in their infancy phases. They're still very early on. And if we want to just take a look at adoption, this is actually a pretty cool chart that is showing you the adoption of the internet, and it compares it to the adoption of Bitcoin. So for the internet, it's showing you the early 1990s. And for Bitcoin, it's showing you here in the earlier 2000s here, in mid 2000s, when this was getting created. Really, Bitcoin's been around for, on exchanges since 2010 or so, where you can actually buy and sell it. But if you look, so far, we've seen Bitcoin grow at an adoption pace of 113% per year. And if you look along the same amount of years that the internet was out, it was growing at 63% a year. So the adoption is actually faster than that of the internet. And at the current pace, Bitcoin specifically should reach 1 billion users over the next few years. But as far as how small cryptocurrencies are, well, Apple, it was at $3 trillion market cap. But recently, we've seen the price come down a little bit. As of today, it's around 2.68 trillion. If you look at the entire cryptocurrency market, so all the cryptocurrencies, the total market cap is 1.78 trillion, and Bitcoin's is 730 billion. So these are still very small numbers compared to even one stock, Apple. And if you compare it to the total stock market, it's very infinitesimal and very early on. So what's a result of this? Well, you can certainly see a lot of volatility. You can see, some big players make some big moves out there. You can see some things out there in the media that can really cause a big correction in price or a big run up in price.
Yeah, we saw something like that today, didn't we? We saw a potential ban in Russia that they talked about. This is not unlike what we saw in the spring when we heard something like this from China, big drop, then a recovery.
Yeah, every time that we've seen any of these kinds of news like this, it's all ended up being really good buying opportunities, actually. But we saw this a lot with China, too. It was almost comical because you kept seeing the news story headline out there, but China banned cryptocurrencies like 10 times. And now we're seeing Russia, who already had a crackdown on mining. Now there's some news stories coming out there, and now they're saying they want to get rid of any kind of buying of cryptocurrencies there. But this is not necessarily new, but it's new headlines out there.
But Dan, you and I went over a chart recently that shows that, as Mark Twain said, history doesn't always repeat itself, but it does tend to rhyme. There's a chart that if you overlay the action from the spring as to where we are currently, it can give us some clues and some of the rhymes that of where we can anticipate potentially Bitcoin going and then what might happen after that.
Well, it's very difficult to predict the price of Bitcoin in the short term because it is very volatile. And there's a lot of factors that can impact it. But if you look at the recent price action, if I were to delete this for a second, if you look at this kind of crashing structure that we've seen from November to current prices now in January, it does look pretty similar to some of the action that we saw when we saw the big sell-off in May and then that period of time to July. And if we were to go ahead and overlay that price action, it does just
to explain, Dan, all you did, if you drag that to the left, you just essentially copied that. And then what you're doing is you're overlaying it to give us kind of a similar take on where we are today.
Correct. It would show you that, hey, look, it looks like we could be somewhere near a bottom where if we were to see a similar type structure, and again, this is similar news out there too, right? So back here, this was the China ban. Here, it's the Russia ban. And we've seen as about a 45% decline. Even if we were in a bear market, these things don't go straight down. We could certainly see us getting close to a local bottom. So some might consider this a good area to enter. Another thing that I like to watch a lot is, what are the whales doing, or the institutional investors out there?
But
And
may I just say, just for everybody listening, past performance does not guarantee what's going to happen here. This, because there's rhymes. Sometimes it works out, not always. So, we've all learned that from watching bonds. We've learned it from watching stocks. And the same thing holds true here. You get clues, but they don't always pan out.
And if we look at something called on-chain analysis, which I think is really magnificent because it's unlike anything we have access to with our current investment classes. With cryptocurrencies, because they all operate on a blockchain, which is transparent, you can actually really look deep into that and look at what's called on-chain analysis and get a lot of behavior or investor sentiment ideas from looking at it. And when you look at the supply component of it, most of the supply out there, the vast majority is held by illiquid entities. That's entities that have a very low likelihood of selling, as well as the supply is considered long-term holder supply, which means that it hasn't moved. It hasn't been sold or transferred in over 5.1 months. But there's two components to any market, right? There's supply and demand. The supply side looks very constructive, but where's the demand, right? So one of the things we're looking for is institutional demand. We did see a lot of institutions, people that have over 1,000 Bitcoin. We saw a lot of them selling towards the end of December. Why would they want to do this? Well, they want to make their books and their profits look good, so they can really extract performance fees. That could certainly be one reason. But when are they going to enter into the market again? And I mentioned to you that since the market's so small, it can be manipulated. This looks very similar to the situation we saw in May of 2021, where there was bad news headline after bad news headline, and it drove the price lower, in my opinion, because a lot of these institutions out there, they wanted to get involved, but they didn't want to get involved at 65,000, right? They wanted to get involved at lower prices. Well, when is institutions going ahead and redeploy their capital? Because there's so many different surveys out there that show that different hedge funds or different money managers out there, they want to get exposure into the space. And it is a space that I think is very exciting because you have the smartest minds and the smartest companies that are dedicating their resources and a ton of capital into innovating on the space. I mean, you look at companies like Square, they have a whole division now that's really dedicated to building things for the blockchain and for Bitcoin specifically.
And Dan, I would imagine that obviously adoption amongst people, as you were showing on that chart compared to the internet, it's growing and growing and growing. And a lot of people that are listening right now, some obviously have expertise, some are trying to learn. And I think when people try to invest, it could be scary because Coinbase, you're not calling a broker. It's like, and Coinbase may be a good choice for you, may not be a good choice for you. There are probably a lot of individuals that would say, man, I wish it was just as easy as calling my broker to have a stock trade or something like that, or having an ETF that was purely on a certain crypto or a basket of cryptos. And really in its purest form, that does not exist today. So you'd have to think that once the adoption were made easier for people to go ahead and trade these, just like they would a stock, you'd have to think there'd be more interest in this. And that would probably suggest supporting prices potentially to a higher level.
100%. We've actually seen the first ETF for Bitcoin come out in 2021. It's the ProShares BITO ETF, but it's not a spot ETF, which means that they're not actually buying Bitcoin as the underlying asset within the ETF. They're actually buying the futures contracts. So once we came out with a spot ETF, which there's many people that speculate we might see that in 2022, that's when you're going to have something that you can go to any brokerage and you can get access, or you can buy it on your own and you can get access or exposure to Bitcoin without having to go to some of these different exchanges out there, which some people may not know how to do. I actually see a lot of questions on, hey, how can I get invested in cryptocurrencies? Well, you can buy it on Robinhood, or you can go to things like Coinbase or Coinbase Pro or KuCoin. There's a ton of different exchanges out there where you can actually open an account. You can fund it with US dollars, and then you can go ahead and buy these cryptocurrencies. But it's something that you want to make sure that you're getting some guidance on, or you're at least doing your research on, because some of these exchanges could be riskier than others. Coinbase Pro is a good one, I think, to start out on, because it's a publicly traded company. It's probably one of the largest exchanges out there. It's relatively very safe. But since we're talking about investments, I think one of the things that's very interesting is most people, when they hear about cryptocurrencies, they think that it's all risky. But there's actually ways you can earn passive income in the cryptocurrency space that can be very exciting. Some can give you returns of the high single digits, and it really is something that most people are unaware of. So think about it like
I'm a big fan of that, Dan. I mean, the platform that I use, I get 8% on cash and about 2.5 to 3% on coins, which is a very reasonable rate of return on the money that you've set aside for this.
Well, a lot of people today, what do? They have a big chunk of money in a savings account or in a money market account. Well, that pays you on average across the US 0.06%. And when you factor in inflation, well, that's certainly negatively yielding, right? I mean, if you have $100 in your account today, you're not really getting much interest. But next year, if you saw 7% inflation, it's going to feel like you have $93 because the cost of goods and services has gone up and it's eroded the buying power of the dollars that you have. So when you take a look at cryptocurrencies, remember, we're removing the bank. The bank is the one that profits from us giving them their deposits. We go ahead and deposit our money, and then they go lend that money out at a much higher rate, and they make the spread there, and they pay us a very little bit of interest. With cryptocurrencies, you're removing that, you're banking yourself. Well, you can take your dollars and you can put them into something called a stable coin. So one of them out there is USDT, USDC. What these are these are different coins that mimic the dollar one-to-one. That's why they call them a stable coin, because the price of them doesn't change. Unlike other cryptocurrencies like Bitcoin, that can be extremely volatile. And then what you can do with those coins is you can go to different exchanges, whether it's Gemini or KuCoin or Nexo. There's a ton of them out there. And you can provide liquidity to these exchanges, meaning you take your stable coins from your wallet, you transfer them to that exchange, and you put them in an account there. And then you get return, you get a yield at what many would consider a very safe way of doing it. And you can get high single digits in most of these cases. And most people don't understand that this is something that's possible to do out there.
Megan, why don't you see what questions are popping up?
So my first thought, just listening to that, I actually had never heard of stablecoins, so that's interesting. But I remember at the beginning of this, when we were talking about this, we talked about how you could invest in cryptocurrency if you're risk adverse. And that sounds like one way to potentially do it, Dan. But are there any other ways that you could highlight if someone doesn't want to be so risky with their investment?
Well, I think that you bring up a great point. I mean, my background before working at MBS Highway I was a financial advisor at Morgan Stanley, and I'm a big believer in having, a diversified portfolio that is in line with your risk tolerance and your time horizon, right? So would I recommend somebody goes and puts their life savings in cryptocurrencies if they might need that money, or they're not prepared to see a ton of volatility? Absolutely not. So you want to invest with money that you're comfortable seeing some big fluctuations, but because it's an early market, and because while you see some big drawdowns, you also see some big upside, it certainly presents an exciting opportunity, I think. And as you see adoption in the longer term, you have some smart people out there like Kathy Woods that have some pretty crazy price targets on Bitcoin as it grows in adoption. But again, it can be very risky. So you want to always be smart in looking at, hey, this has to be a portion of my portfolio that I am comfortable seeing that risk. And if you're a little bit elderly and you need access to those funds, well, you're not going to have the time to be able to weather an economic cycle. So I wouldn't recommend that you get involved in this space unless you're doing some things with the passive income play that can be very safe. And this just reminds me, one other thing I just wanted to bring up on this call is that we're talking about crypto as the investment, and we're talking about how Bitcoin runs on its own blockchain and many of these cryptos run on their own blockchains. But blockchain technology is what I think is one of the most exciting things out there. Because remember what I said, the blockchain, it's not just meant to record transactions. The blockchain can literally be used to verify anything in a trustless manner. You don't have to trust the person on the other end. You can know in real time that something is verifiable. So some other use cases besides transactions, how about voting records? Those could be put on a blockchain and you can instantaneously know what those are. Identity, instead of going to a central authority like the DMV to go ahead and verify your identity, it can all be done on a blockchain where it's distributed and it's in real time. And this is also exciting stuff, as we talked about, with other countries that are underdeveloped and giving these individuals identity for the first time. How about with supply chains? They can really significantly enhance supply chains. Everything now, everybody wants organic, right? Well, what if you had an orange that says it's organic? Do you know it's really organic? Well, what if there was a barcode on there that you can scan and it literally shows you the lineage of where this orange originated from and the entire supply chain that's all recorded on the blockchain? There's also ways in mortgage and real estate that the blockchain can impact things. Excuse me. So a lot of the verification methods we use today are a little bit slow or expensive, or maybe a little bit antiquated, some might think. Let's think about title, for instance. You have to have things at the recorder's office. I mean, there's ways that you can put title and different things, which typically have a lot of errors on them, that you can put those on a blockchain. And now you can instantaneously know that, hey, this customer owns this property. There's no liens against it. And then there's something out there called smart contracts that can be utilized to automatically execute things. So what I mean by that is that we've kind of adapted the dollar for the digital age, but these cryptocurrencies were literally created for the digital age. So a lot of the money is programmable through the use of smart contracts. And without getting too much in the weeds on this, essentially you can remove some middlemen. And in a lot of cases, you can almost remove the need for escrow and have the blockchain do that for you, where it can hold something and you can have the exchange of signatures. And then all of a sudden it automatically transfers the title and automatically transfers the security deposit and things of that nature, where you can have things happen faster, cheaper, and with less human error. And real estate today is actually already been put on a blockchain. So there's websites out there like Realty or Propy. There's websites where you can go to and they've tokenized real estate. So they've taken a real estate investment property and they've put it on a blockchain. And what I mean by that is that you can go to their website and they have their own native token that they've created. You can exchange your dollars for their token. And then I can go ahead and search different investment properties. And what I can do is I can buy fractional shares of a real estate investment property anywhere in the world that they have these properties. And then they use smart contracts and they pay you the rent, right? Because there's somebody renting this property. They pay you that in a daily yield that automatically gets sent out to the token holders, their pro rata share.
So Daniel, I know you're struggling with that, but go ahead and take a sip of water, buddy.
Yeah.
Hey, Megan, let's go to some of those questions. But before you do, it's so interesting. And listen, that's obviously the wave of the future. This is happening. And it will continue to move in this direction because you're making it faster, much more accurate, and reducing costs dramatically. So, it's our job to kind of look at the future before it becomes obvious and see beyond the headlights. And what you're seeing is this decentralized digital world that we're already part of, accelerating and really being exciting to us. So we have to stay on top of it. We have to definitely stay on top of it. Otherwise, we're going to get left behind. Go ahead, Megan. There's definitely some questions that we can answer. I see many, many comments.
So one of the questions is, there's many of our MBS Highway subscribers on here, and they talk about how, we talk about in our morning update where rates are headed and things like that. And we look a lot at the news and different reports. So when it comes to cryptocurrency and kind of analyzing and forecasting where it's going to go, can we look at similar kind of metrics?
There's a very strong correlation to the S&P in cryptos, but it doesn't have an enormously long track record, but and it hasn't been tested. Am I right, Dan? Because we've been in a relatively bullish marketplace in the equity world, and cryptos have responded. So we're about to really see some testing coming up with the Fed ending tapering, supposedly beginning to tighten. It's going to be really interesting to see how the crypto environment responds here. Do they respond more like the bond market, which should be favorable because you're eliminating inflation? Or does it respond more like the stock market, which likely will be adverse as the risk type of assets become less in vogue and as it becomes more expensive to borrow?
That's really going to be a big test, I think, in 2022 for cryptocurrencies and Bitcoin. When we look at when Bitcoin's been on exchanges since, it's really been since 2010. And from that period of time to now, for the most part, all cryptocurrencies have known is a bull market in the stock market. Of course, you had like a 2019 dip, you had the COVID dip and things of that nature, and you saw cryptocurrencies respond. But right now, they have about an 84% correlation to the stock market. So I think one of the big things that people are looking for is how are cryptocurrencies going to react if we do see a tough year in the stock market. Are cryptocurrencies going to continue to be extremely correlated to risk on assets? Or are they going to stand on their own 2 feet like many people hope that they will, so they can be an uncorrelated asset class? So I think that that's going to be a big theme, as well as what you mentioned, the impact of the Fed and the Fed trying to get their arms around inflation by hiking rates, removing accommodation. Those are all going to be, I think, key themes for 2022.
Now, it's not really point of this discussion, but a big buzz theme is the non-fungible tokens, or NFTs, right? And there is some correlation here between cryptocurrency and NFT. NFTs, non-fungible tokens, it essentially gives you the right to something, the right to a baseball card or a drawing or whatever it is. You don't have the physical nature of it, and there could be copies all over, but you have the to use a very old term, the negative, so to speak, where you can print off of almost, but it's the digital copy of that. So Dan, can you please tell us what the correlation is between NFTs, non-fungible tokens, and the crypto environment? Because there definitely is a correlation there.
Yeah, so NFTs, they can be a little bit difficult, I think, to get your arms around and understand, because, an example of an NFT is like the original clip of some sports play that happened. And some people are like, well, why would I want to do that when I can go pull it up on YouTube, right? I mean, why is there value to that? Or the reason I would explain this would be like, it's a new type of almost art, right? So how many copies are there of the Mona Lisa out there? There's a ton, but the original Mona Lisa is worth a lot, right? So this is like almost like a different kind of art for the future, where you have like digital pieces that are like the original, or there's, in many NFTs, there's only a certain limited supply of ones that they go ahead and release, and people have value to that. It's really like an art to the future. One of the things that I think most people thought was crazy was the first tweet ever. That thing went for millions and millions of dollars, and people were like, why would you buy the first tweet? And the individual that bought it said that, I think you got to think bigger here and think that this is like the Mona Lisa of the past, of the future here. So this is like a new type of artwork. And many people believe that instead of having like physical playing cards, the kids of the future, they're going to be like, hey, take a look at my NFTs, and you can see it online, right? And take a look at my digital playing cards that I have, and different things of that nature. And as far as the correlation to cryptocurrencies, well, you buy them with cryptocurrencies. Some of them are on the Ethereum blockchain, some of them are on the Solana blockchain. So you literally have to use them to facilitate those transactions.
Could I just say something? It's been kind of funny to watch this whole thing evolve. I remember we were doing a morning update one day. Barry hadn't invested in crypto at all. We're sitting there. He's a little unsure about it. I'm like, no, I'm not investing in that at all. And you guys went ahead. You both started investing in it, and it's just built upon that. Meanwhile, I haven't invested in it yet. And there are many on the call here that haven't yet. And we're sitting here asking ourselves, okay, we want to be diverse in our investment. So if we were to get started in this crypto world, how much of our portfolio should we invest?
Well, you know what, Megan, I'm going to take a little bit of a victory lap here, because I remember telling everybody, I went on the National Real Estate Post. I was telling everybody in the very early stages there in like 2017, 2018, that I thought Bitcoin was something that people should really consider. And that was way back below 10,000. So that's done well since then. But yeah, I'll tell you for my personal, because I don't think we can advise anyone. It really depends, as what Dan said, their own personal risk tolerance and what their own personal feelings are as to what the future holds for this type of investment. The first thing is that you should know that it's risky. That's number one. There is, with anything, there's risk. The stocks are going to be risky. Gold has risk. Everything has risk. So understand that first. Now, for me, I believe a portion of my assets should be in it. For some people, they feel maybe it's 1%. Some people think maybe it's 5%. Some people think maybe it's more. So I believe that a portion of your assets that would not change your life is something that you might want to consider having in this space, because there is probably some reason to believe that it will perform somewhat along some of these other assets that have done well in the past, that had a bright future, like Dan pointed out, in the internet. But again, it does not come without risk and without volatility.
And here's the thing too. I remember, Barry, when you got in it, it was below 10,000. I was like, whoa, that's a lot. And now
it was actually 6,000 when I first started suggesting it.
And it's been this whole thing now where it's gotten so expensive, and people, are saying, well, I'll get in when it comes back down. So my question is, when
it's come
is
down
it
40,
get in?
it's come down 45% from its all-time high just in November. So
So would you
I think
say now is a good time to get in?
again, I don't want to give financial advice, but I think some would consider it a potential good entry point, or somewhere in this neighborhood, because you have seen a pretty big decline from the all-time high. I think that as a philosophy, when you're investing in things, you want to try to be a contrarian investor, like some of the famous ones out there. Baron Rothschild, what did he say? He said, you buy when there's blood in the streets, right? You want to
John
be
Templeton, you want to be a buyer on the most pessimistic day.
Exactly. So, you want to do your own research for these things. And, there's also some things that we could suggest as far as where you can get some more information, and where you can maybe get some advice on some of the news out there, some of the technical analysis, some of the on-chain analysis, and really just resources to help you make the most informed decision that you can.
Yeah, Dan, and you do a good job of that too. I'm just going to give you a shout out here. Dan's got a site that this has been a passion of his, and it's called CryptoCharged.com, and it's something that you should check out. You do a really good job with a couple of other people who also do an excellent job with you. It's something that's worthwhile. It's CryptoCharged.com. That's just a little shout out to you there, son.
Yeah, it's something that I'm involved in, and I think it's something that is really helping a lot of people to understand the space on a day-to-day basis. And just to kind of show you where you would go, I did do something special for this call, where you go to CryptoCharged.com, you click the sign up now button, and then you just fill out some information here, and you use a coupon code MBS, and it gives you 50% off. So if you were interested in learning a little bit more, it's CryptoCharged.com, and make sure to use the code MBS, and it gives you a 50% discount, and really helps to kind of guide you on a daily basis through the volatility out there, give you some ideas on some exciting new coin projects out there that might have some promise based on what the utility is that they're trying to do, and what they're trying to accomplish. Really kind of steer you clear of some ones out there that could be scams and things of that nature. And then there's an entire learning center in there that will really show you in video format, hey, where do I go to create accounts? How do I act? How do I do these trades? Should I be doing market orders or limit orders? How do I even learn how to do technical analysis on my own? So again, it's CryptoCharged.com. And if you're interested, the code is MBS, and that'll give you a 50% discount.
So I saw a lot of people ask what platform I use. The platform I use is Genesis. So yeah, it's not a plug for them. That's the platform I use. I'm not saying they're the best, they're the worst, or whatever. It's who I use. But I see that question coming up quite a bit. So that's the answer to that one. Megan, are there any other questions that we should address here? Because we've got about 10, 12 minutes left. So let's try and answer some questions for everybody.
Yeah, I see that. I see people are asking if I use TradingView. I do. TradingView is in my opinion, the best trading charting software out there.
Oh, we use it too.
You can use a free account, or you can pay for a premium one that gives you a little bit more access to some of the different indicators and such. And then as far as the sites that I actually have my coins at, it's Coinbase Pro, which, by the way, I recommend you do Coinbase Pro versus Coinbase, because the fees are cheaper and you have access to more coins. And then also I use KuCoin as one that you can get access to more coins than they have available at Coinbase or Coinbase Pro. And they also let you do leverage trading for those of you that really like to get risky as well.
If there's not enough volatility in it already, and you want to put leverage on top of it, yeah. Megan, any questions that we should answer meanwhile?
Well, I appreciate that you guys answered, what platform you use to purchase this. But another question that we've been getting asked, so many people have been asking about various coins. And before we get into all the individual coins that they're asking about, just simple question here is, there's a lot of coins. What are your thoughts? Are some better than others?
Of course, there's over 6,000 coins out there currently. So it would be impossible for anybody to be an expert on all of them, right? But I think that no matter what coin is out there that you're going to invest in, you want to make sure you're doing your research. There's a couple of things that I like to look at as far as like a checklist for a coin that I want to invest in. Number one is, what is the utility, or what is the purpose of the coin? What is it trying to solve? Number two, I like to look at the team behind it. Does it have a good team behind it? Does it have, people that are trustworthy, that are successful, that you think it has a good kind of runway for success? And, I also just really like to take a look at what other interoperability there is, right? Because some of these can operate on different blockchains. and what the consensus mechanism is. Is it a large cap or a small cap coin? There's a bunch of different things that you should be looking at, but you don't want to just enter in blindly, because I can tell you what I do see a lot of out there. Ethereum is one of the biggest coins out there. I've seen a lot of people create coins that almost sound like Ethereum, and they're like pump and dump schemes where they get famous people to go ahead and promote a coin, and the coin's like 0.000004, right? And it's like, it'll never get to $1, but all these people are like, oh, what if it goes to $1? I'll be rich. I'll be a millionaire, right? And the problem is that it's like a scheme where they pump it. They get celebrities that they pay to go ahead and say they should invest in this coin. The price goes up. It allows the people that created the coin to get the heck out. And then they pull the rug out from under you and you lose all the value. So you want to make sure that you're doing your own research, and you want to make sure that you're investing in coins that have a purpose and have a utility. And again, you want to be investing in an amount that you are comfortable with. You don't want to be putting in more than you're comfortable seeing fluctuate and see volatility with.
Now, one other thing, just because we have a few minutes left and everyone's asking about it, and I'm curious too, how do you think this whole blockchain crypto is going to associate with the metaverse, which is soon to come?
The metaverse is pretty crazy, Megan. So you can see that, Facebook changed their name to Meta, right? So there's a lot of investment that's going on in the metaverse. The metaverse is like a digital world. You literally can buy real estate properties and do all kinds of crazy stuff within the metaverse. It's definitely something that's coming. And I think people don't understand why is it to be like the way it is, where, I mean, you could buy some properties cost, depending on different areas that you're buying properties, it can cost like hundreds of thousands of dollars in real money. And it seems very difficult to understand why it has value, but I think it's something that's definitely coming, where you're going to see this digital world.
A lot of people said that, Dan, when the buzzword that people were learning about was social media. There's so many things like that have just, but it's initially a little bit difficult to wrap your arms around, but it is definitely coming. It's getting exciting. What else we have on there, Megan? We've got about 7 minutes left here.
It is definitely getting exciting. People are asking, aside from the website, how they can get a hold of you. And your Instagram handle, if you just want to shout that out to everyone.
Oh, can we talk about that for a second on Instagram? How many fakes that are out there? Team, please be careful about that. I've been faked. There's a lot of people that get faked. Look, no one's ever going to ask you to send money. So
this is something that you have to be very careful about in the crypto space. So here's what's happening. Because cryptocurrencies are decentralized by nature, if you send your coins to somebody, there can be no way of you getting them back. Remember, all transactions on the blockchain are final. They are what's called immutable. So you can't go ahead and have any recourse there, and you won't even know where you sent the money to. So this is the thing. There's many people out there that try to take advantage of some people's followings that they have, and they create a copycat profile. One of the easy ways to tell that it's a copycat profile is all the posts are from like the last few days as opposed to over time, right? Obviously, I didn't do all my posts just yesterday. But they make it look almost identical to your real profile. They buy followers, so it looks like it's your real account. And I just had people sending me yesterday examples of this individual who copied my account. He put an extra underscore, and he's asking them if they want to invest. And if they want, they can send him cryptocurrencies to a specific address, and he's going to handle everything for him. So please, please, please be very careful. We will never ask you to send us your cryptocurrencies or money. We will never ask you to invest with us. And you just want to be careful in general. If anybody does
that, be really careful today. I know you're all smart, but sometimes you just think it's a trusted source. So just please double, triple check. Don't ever send money, special crypto money, because as Dan said, immutable.
Yes. And my Instagram account is Dan_Habib. That is the only one that I have. And the one for CryptoCharged is CryptoCharged. But yeah, just be careful for the fakes out there. Again, we'll never ask you to send us.
And I know Diana, who's another one of our rock stars, I know you're there listening and monitoring. If you see any questions, just please go ahead and pop them in there for us, Diana, that we should be answering, because I know poor Megan's watching the dizzying pace of all these questions come through. It's hard. I have to go to the glasses a few times, Meg, So
some people are like, how do I shut off the chat? Other people are like, how do I print it? So it has been definitely great to see how you guys have gotten so involved in this.
Now, one thing I do want to mention, though, team, that everybody watching this, that, we always try and bring value at MBS Highway. The other day, Katie Stockton, she's so sweet. She called me And she's like, Barry, what can we do for you guys? And I said, listen, we'd love to have you back on. You're always very popular. And let's maybe do something where we talk, of course, about the stock market, about the bond market, but let's throw some crypto in there too, because I know a lot of you guys are interested in your technical take on cryptos. Now, listen, I can tell you this, thank God we've been blessed that we've had a pretty good way of understanding the way that technicals respond in the bond market. In a stock market, sometimes that works well too. But in cryptos, it's very hard with technicals. They can be, it's so volatile though, they can be helpful. But I think that, Dan, would you agree that the technicals are even more challenging in the crypto space?
Well, I think that if you're trying to take your traditional technical analysis, maybe if you do that on the stock market, there's some key differences with cryptocurrencies. Number one, they're much more volatile. But number two, if you're looking at different candlestick patterns and such, there's a difference because remember, cryptocurrencies, they trade 24/7. They trade like a currency, like the Forex market. So there's no closing at 4:30 p.m. Eastern time or anything of that nature and opening it at not, it is a continuous 24-hour thing. So you're not going to get, the same kind of candle formations that you would normally get because they never technically close. But also, there's different indicators that I would be looking at with cryptocurrencies versus typical stock market, just because of the nature of it. And the other thing is that, many people like to look at different time frames with cryptocurrencies. Whereas with the stock market, you're pretty much looking at like a day chart for the most part. But with cryptocurrencies, because they're so volatile, people like to look at a 4-hour chart or a 6-hour chart, or sometimes if you're doing some shorter term trading, they like to look at a 15-minute chart. I mean, so these are things that are not abnormal in the crypto markets, but would be very different in the stock market.
Megan, any
Well,
any
one
other
more
questions?
question, because this keeps being brought up, and I do feel like we lightly touched on it, but the possibility of just crypto being banned, the Fed coming in, doing something, just overall being banned.
So one of the things that you always want to look at is the regulation risk. However, you've had, both the president, you've had Fed Chair Jerome Powell, you've had key people in our country say that they're not banning cryptocurrencies like China. So that has been clearly stated, but certainly they want more regulatory clarity out there. So that is something that can provide a headwind, depending on, it looks like the talks that they've been having with Congress has been quite constructive compared to older conversations. And it seems like they are kind of understanding a little bit more about cryptocurrencies, but that's kind of like a question mark as far as, are they going to do any different kinds of regulation? I can tell you one thing that's probably going to change in 2022. That is the taxation of cryptocurrencies. So you see, in 2021 and before that, it was really viewed as property as opposed to like a stock, meaning that the tax laws didn't apply the wash sale rule, for instance, where if with a stock, if you're at a loss in that stock position and you sell it, well, you can't claim that loss unless you wait over 30 days to buy it back. With a cryptocurrency, because it was considered property in 2021, and they haven't changed the rule yet, but it's likely that they will, you can do something called tax loss harvesting and go ahead and apply those losses against any capital gains that you have. So for instance, cryptocurrencies are volatile. Let's say in May to July, when it went from 64,000 all the way down to 30,000, you could have sold the coins really quick and then bought them right back and then actually claim that loss against any gains that you had in that year, even though you bought it right back that same day. That's something that you could do right now with cryptos, but they're probably going to make a change to that.
Yeah, that's an excellent point. So Megan, I see we're winding down here. We want to be respectful of everybody's time. I just want to thank everybody. It's great that there's so much interest in this. Dan, first of all, as a dad, I want to tell you I'm really proud of you and the knowledge that you've gained here. And this is Dan does that just as a passion in spare time. He's focused almost all of his energy. I don't know, he does it on MBS Highway and doing well. And Megan, of course, you always bring so much value. Appreciate you guys so much. And Dan, I know you're behind the scenes watching this and monitoring this, always so important in everything that we do. Hey, listen, team, we thank you so much for taking part in this discussion today. And just tell us what you like. We'll try and provide more of it. We'll have Katie Stockton on to talk about this. And Dan and Megan, I'll let you guys sign off.
Yes,
hey, thank you guys so much. I'll let you go first, Megan. Go ahead.
I just want to say thank you guys as well. And many of you have been asking throughout this, you will be getting the recording. Give us until Monday and we'll shoot that over.
And thank you guys for spending your valuable time with us. listen, we wanted to make sure to listen to all of you. Many of you had requested that we do something like this on cryptocurrencies, but feel free to keep sharing with us. Again, if you want to check out CryptoCharged, it's cryptocharged.com. And if you're interested in going and signing up there, the code is MBS and it gives you 50% off. So thank you all. We'll make sure to get the recording and some of that content out to you. And we appreciate you.